Crude oil has seen a significant rally now since June. Brent crude is up by more than 1/3, and right now we are testing above $60 for the first time since 2015. The latest news that has helped drive the market higher is the expectation that OPEC will continue to maintain its production cuts throughout 2018. This is actually the rebranding of old news, because this is one of the reasons why the market has been rallying quite strongly over the past few months. But what really lies behind it as well is increased investor interest. We're seeing continued buying in Brent crude and WTI as well to a certain extent. The gross long right now is more than 1 billion barrels, close to the records we saw back in March. And the reason behind it is really the perception in the market, and also actually reality, that fundamentals has improved quite significantly since the beginning of the year. The Brent crude oil curve is now in what's called backwardation, which basically means the spot price is the most expensive. This is giving passive investors in crude oil a free return every month on the roll basis, because they're selling high, buying the next one lower, and that's attracting a lot of investment demand into Brent. So the risk of this obviously is that we're going to run ahead of fundamentals, because at this stage OPEC needs to cut or needs to maintain their cuts next year. There's no doubt about that. Current expectations for global demand growth is around 1.5 million barrels. At the same time, the increased supply from non-OPEC producers is roughly around the same level, 1.5 million barrels. So, if anything, we are just about to we're going to see a balanced market next year. But that obviously means that inventories will not be reduced much further than they are at this stage. So, at this stage, the market is driven by momentum. If you look at the chart here, we have a very big key technical level just below 61 on Brent crude. It's a 38.2% retracement of the whole sell-off we had from 2014 to 2016. There's going to be a bit of a battle around that level. I believe if we look towards the end of the quarter, that we are at the top end of the current range. With the elevated positions now in the market, the risk is to a certain extent skewed to the downside. If there is any price negative news hitting the market, then there is quite a significant long that needs to be adjusted. So I think on that basis we are close to the peak of the market.